Okay, this night we shall be looking at a topic called transfer pricing. Transfer pricing. Last week we discussed pioneer legislation. We solved question on pioneer legislation. So this night topic is called transfer pricing regulation in Nigeria. This topic is one of the topics that we call international taxation policy. Is one of the international taxation policy, like double taxation relief, taxation of non-residents, base erosion profit shifting, tax haven. So this transfer pricing too is one of the topics that affects taxation globally. In Nigeria, transfer pricing regulation started in 2012 by Transfer Pricing Regulation Act 2012, precisely August 2nd, 2012. This transfer pricing regulation is the act as an objective to fight against tax avoidance. We can call it aggressive tax avoidance engaged by multinational companies. We know that one of the methods by which a company engages in base erosion profit shifting is through transfer pricing. So, as a result of that, the tax authority want to ensure that when there is a transfer pricing between two interrelated parties, the price is regulated by the tax authority so that the price will not be an artificial price, so that the price will be at arm's length price. So that is the reason why transfer pricing regulation was introduced. So this transfer pricing regulation, we start by what is transfer pricing. As we all know, transfer pricing means the price at which goods and services are transferred between interrelated parties, or the price set for transaction between associated entity. So that is what transfer pricing means. If company A is a subsidiary, while company B is the parent, if company B sells goods to company A, the price charged by company B, that price is called transfer pricing. The price at which goods and services are transferred between two interrelated parties. That is transfer pricing. Some people said the price at which goods and services are carried out in a cross-border transaction. Cross-border transaction means when the buyer is in Nigeria and the seller is outside Nigeria and they are related, that is transfer pricing. Now, what are the scope of transfer pricing or transaction in which transfer pricing will be regulated? FRS, in Nigeria, FRS, they are the ones that regulate transfer pricing. That means they determine the fair price in which goods and services will be transferred between two interrelated parties, so that that price is going to be at arm's length, so that it will not be an arbitrary price. So FRS, they are the ones that fix the price. So what are the scope of transfer pricing regulation? Under the Transfer Pricing Act, Regulation Act 2005, the following transaction covered under the transfer pricing. That means if you engage in this following transaction, that means you need to comply with transfer pricing regulation. One of the transactions is sales or purchase of goods and services. When you buy or purchase of goods and services, when there is sales or purchase of goods and services between two interrelated parties, between husband and wife, or between parent and subsidiary, between employee and employer. So in that case, there will be a transfer pricing. Another one is sales or purchase of tangible assets. Sales or purchase of tangible assets. Sales or purchase of tangible assets too. That one too is going to be done, is also covered under the transfer pricing. Sales or purchase of tangible assets or lease of tangible assets. Another one, transfer, purchase, license, or use of intangible assets too. This one also covered under transfer pricing regulation. Another one is provision of services. When two companies, they are related, one company is now providing management service to its subsidiary or to the associate. That means that transaction is covered under transfer pricing regulation. That transaction is covered under transfer pricing regulation. Lending and borrowing of money too is also covered under transfer pricing. Manufacturing arrangement is also covered under transfer pricing. So these are the scope of transfer pricing regulation. Now, let's look at transfer pricing in Nigeria. Transfer pricing in Nigeria starts, the regulation of transfer pricing started, like I said earlier, in 2012. And the guideline was released by FRS exactly around October 2012 on how related party transaction will be treated. So, and what are the documents, what are the return that will be filed by most of companies engaged in transfer pricing, most especially multinational companies. So what are the timeline for them to file return, and what are the additional documents or supporting documents that will be needed while filing the return? All these have been stated in the transfer pricing. So the roadmap for transfer pricing started in 2012 in Nigeria. So FRS started regulating transfer pricing in 2012. So transfer pricing is mostly common when there is a connected taxable person. Connected taxable person means related party. When subsidiary is connected to the parent, when husband is connected to the wife. So all these are connected taxable person. So that is when transfer pricing regulation occur. So that is when transfer pricing regulation occur. Now, what are the legal framework for transfer pricing in Nigeria? What are the legal framework for transfer pricing in Nigeria? What are the legal framework for transfer pricing in Nigeria? What are the legal framework for transfer pricing in Nigeria? So, Section 22 of Company Income Tax Act, Cap C21 LFM 2004, states about transfer pricing. So that section discuss about transfer pricing under the company income tax. When you look at the section 22, it's talking about what are the method of transfer pricing. So what are the return and documentation for transfer pricing. So, and transfer pricing policy. So likewise too, section 17 of Personal Income Tax Act also discuss transfer pricing. Section 17 of Personal Income Tax Act also talk about transfer pricing. Section 15 of Petroleum Profit Tax 2, Section 15 of Petroleum Profit Tax Act 2, as amended, also talk about transfer pricing. Why Section 61 of Section 61 of Federal Inland Revenue Service Act 2007 also discuss transfer pricing. The last legal framework that we have on transfer pricing is Income Tax Regulation Act 2008. Income Tax Regulation Act 2008. Some people call it Transfer Pricing Regulation Act 2018. Sorry, Income Tax Regulation Act 2018 or Transfer Pricing Regulation Act 2018. Those are the law. These are the regulation or legal framework that guide transfer pricing. These are the law that guide transfer pricing. So please, let's take note of this. They are about 5 in number. First, Section 22 of Company Income Tax, followed by Section 17 of Personal Income Tax, followed by Section 15 of Petroleum Profit Tax Act, Section 61 of FRS Establishment Act 2 also discuss transfer pricing, and we have the last one is Income Tax Act, Income Tax Regulation Act 2018 or Transfer Pricing Regulation Act 2018. So now that will take us to administration of transfer pricing regulation. Administration of transfer pricing regulation. How do we administer transfer pricing regulation? How do we administer it? Who administers it? Who regulates it? Who regulates it in Nigeria? We all know the primary responsibility for administration of transfer pricing regulation lies with who? FRS. FRS, they are the one that regulate anything that has to do with transfer pricing regulation. So in Nigeria, they are the responsible tax authority. So apart from that, we have transfer pricing unit. Under the FRS, there is a particular department or unit that is created purposely for transfer pricing. So they are the one that review transfer pricing documentation, and they also conduct transfer pricing audit for multinational company, for company that, for even for a local company that have different subsidiaries. So apart from that, we have another administration of transfer pricing regulation that we have is the Tax Appeal Tribunal. The Tax Appeal Tribunal, they are the first court hearing that we hear that they are the one that will review the case between the taxpayer and the tax authority on a matter relating to transfer pricing. On a matter related to transfer pricing. So Tax Appeal Tribunal too, they are they are part of the administration of transfer pricing. So when you are asked what are the administration of transfer pricing regulation, they expect you to mention first FRS, Federal Inland Revenue Service. Second, transfer pricing unit. Why? Third, the Tax Appeal Tribunal. Now, why objective of transfer pricing regulation? What are the reasons why FRS said they want to be regulating transfer pricing? Objective of transfer pricing regulation. What are the objectives of transfer pricing regulation? Number one objective of transfer pricing regulation, as stated in the Transfer Pricing Regulation Act 2012. Number one objective is called to ensure that Nigeria is able to tax on appropriate taxable basis corresponding to economic activities deployed by taxing persons in Nigeria, including in their transactions and dealing with associate enterprise. So what this one means is to ensure that appropriate tax is levied on economic activity engaged by any multinational companies that have an associate and that deal with transfer pricing. Another one is to provide the Nigeria Tax Authority the tools to fight against tax evasion, to provide Nigeria Tax Authority the tool to fight tax evasion through overpricing or underpricing of control transaction. So control transaction, like we know, transaction between parent and subsidiary is a control transaction. Transaction between employer and employee is a control transaction. Transaction between wife and husband is a control transaction. Transaction between family, they are control transaction. So another objective of transfer pricing is to reduce the risk of economic double taxation. Is to reduce the risk of economic double taxation. Economic double taxation means a situation where an income is taxed twice in the hand of the same taxpayer. So transfer pricing helps us to reduce the risk of where an income will be taxed twice in the hand of the same taxpayer. And another objective is to provide a level playing field between multinational enterprise and independent enterprise doing business within Nigeria. Is to provide a level playing field between multinational enterprise and independent enterprise doing business within Nigeria. Another one is to provide taxable person with certainty of transfer pricing treatment in Nigeria. To provide taxable person with certainty of transfer pricing treatment in Nigeria. This is one of the objectives of transfer pricing. Now, what are the fines and penalties relating to transfer pricing regulation in Nigeria? Fines and penalties relating to transfer pricing regulation in Nigeria. Failure to disclose control transaction or late filing of country by country return. They attract penalties. So first, one of the penalties is when a taxable person contravenes any of the provision of transfer pricing regulation in respect of filing of transfer pricing return, that person shall be liable to penalty, and the penalty that is prescribed either by Company Income Tax Act or Petroleum Profit Tax Act or Personal Income Tax Act. So when a taxable person contravenes a provision of transfer pricing regulation, that person shall be liable to a penalty stated. If the person is an individual, he will be liable to a penalty stated in the personal income tax. But if the person is a company, he will be liable to a penalty stated in the company income tax. Whereas if the company is a petroleum company, they will be liable to a penalty stated in the Petroleum Profit Tax Act. So this is one of the penalties relating to transfer pricing regulation. Another penalty is failure to disclose control transaction. When you sell good to your associate, or you sell good to your subsidiary, or you sell good to any, when you fail to disclose that transaction in your financial report, while presenting your financial report, while presenting your tax assessment, while filing your tax return, when you fail to disclose such control transaction, especially if you're a multinational company and you fall under transfer pricing regulation, first, you'll be liable to penalties of 10 million naira or 1% of the value of the control transaction. Which one is higher? Second is additional penalties of 10,000 naira for every day in which the failure continues. Additional penalties of 10,000 naira for every day in which the failure continues. So that is failure to disclose control transaction. Another one, late filing of country by country return. When you fail to file country by country return as a multinational company, you are expected to file CRC return, country by country return. That means if you are a parent company, all the country that your subsidiary is located, you need to show us the turnover of all their subsidiaries. You need to show us the cost of sale. You need to show us the expenses. You need to show us the tax paid in all the country. That is country by country reports. So these are the penalties for failure relating to transfer pricing regulation. These are the penalties relating to transfer pricing regulation. These are the fines and penalties relating to transfer pricing regulation. Now, the next area we are going at, documentation for transfer pricing regulation. What are the documentation if we want to do transfer pricing regulation with FRA? What are the documentation for transfer pricing regulation? Documentation for transfer pricing. This documentation for transfer pricing documentation is divided into three. First, transfer pricing documentation is divided into three. First, transfer pricing policy. Second, transfer pricing compliance report. Why? Third, transfer pricing return. This transfer pricing return is also called transfer pricing disclosure or declaration form. So when we talk about transfer pricing documentation is divided into three. First, transfer pricing policy. Second, transfer pricing compliance report. Third, transfer pricing return. Transfer pricing return is otherwise called transfer pricing declaration and disclosure form. Now, what is transfer pricing policy? This is a document that is required to fill with transfer pricing units of FRS. As a company, as a multinational company that have a subsidiary or that have a parent, you need to fill a transfer pricing policy with FRS. And this transfer pricing policy is a document that contains the guideline. It contains the information that guide the conduct of related party transaction. It contains the information that guide the conduct of what? Related party transaction within a group of companies. So this is a document that contains the information that guide the conduct of related party transaction within a group of companies. That is transfer pricing policy. So it guides the conduct of related party transaction within a group of companies. However, there are two types of transfer pricing policy. We have group transfer pricing policy. That is the transfer pricing policy for the whole group of companies. Let's say, for instance, transfer pricing policy for Dangote Group. That is transfer pricing policy, group transfer pricing policy. While second one, we have local transfer pricing policy. This one is transfer pricing policy that is unique to only one company. Maybe transfer pricing policy for Dangote Cement or transfer pricing policy for Dangote Sugar. These are local transfer pricing policy. So transfer pricing policy, like I said, is a document that contains information that guide the conduct of related party transaction. So this policy has some features. What are the features of transfer pricing policy? What are the features of transfer pricing policy? One of the features of transfer pricing policy is, number one, they are typical prospective in nature. They are prospective in nature. Another one, they are not updated unless there are significant changes. Transfer pricing policy, they are not regularly updated unless there are significant changes. Why? Another one is they provide future view of likely intercompany transaction. They provide future view of likely intercompany transaction. So this is So another features of transfer pricing policy is they provide guidance on pricing of transaction and their methodology. They provide guidance on pricing of transaction and methodology. They provide guidance on pricing of transaction and methodology. These are transfer pricing. These are the features of transfer pricing policy. So like I said, transfer pricing documentation has three elements. First, transfer pricing policy. Second, transfer pricing compliance report. Why third, transfer pricing return. We have looked at transfer pricing policy. Now we can go ahead and look at transfer pricing compliance report. Transfer pricing compliance report, this is a documentation that is retained by connected person and shall be adequate to enable the FRS to verify that the controlled transaction is consistent with arm's length principle. Every year, you need, as a company, you need to be giving transfer pricing compliance report. That means that transfer pricing compliance report, you are stating that the transfer pricing transaction that you deal with within that year, the transfer pricing transaction that you deal with within that year is comply with arm's length principle. That means it's not underpriced or overpriced. It's based on arm's length principle. It's done at fair value. It's done at fair price. There is no partial on this. So transfer pricing compliance report is a report rendered by company to the FRS stating that the control transaction is consistent with arm's length principle. The burden of proof of the condition of the control transaction are consistent with arm's length principles. So that is that. This transfer pricing compliance report, we can look at it in two ways. Number one, administrative procedure. Transfer pricing department shall review the transfer pricing documents submitted and carry out review of the transaction. When you submit your transfer pricing compliance report, the transfer pricing unit of FRS will review it to ensure that, to verify whether they are inappropriate with transfer pricing method or is in line with arm's length principle. So burden of proof too. This transfer pricing compliance report must be able to prove to the FRS that all the transactions that you do, you engage in as a company under the transfer pricing the transaction is carried out with arm's length principle, and the profit that you make is a fair profit. So that is that. Now, the last one under transfer pricing documentation is transfer pricing return. At the end of the year, company file return. While filing tax return, they will also be required to file what is called transfer pricing return. This transfer pricing return, we can look at it in different ways. There are different types of transfer pricing return. First, transfer pricing declaration form. Transfer pricing declaration form. Why second one, transfer pricing disclosure form. While filing transfer pricing return, you will fill a form called transfer pricing declaration form. You also fill another form called transfer pricing disclosure form. While the last form that you are going to fill, country by country reporting templates. That means the breakdown of your global income, your global profit, your global tax, your global expenses. Now, still on the transfer pricing return, what are the due dates for filing transfer pricing return? The timeline or the due date for filing transfer pricing return depends on the type of transfer pricing return. If it is transfer pricing disclosure form must be filed along with the company income tax. That means it must be filed not later than June 30th of the following year, 6 months after the end of the year. That is transfer pricing declaration form. The timeline is 6 months after the end of the year. But in the case of transfer pricing disclosure form must be filed on or before September after the end of the year, which is 9 months after the end of the year. While country by country report must be filed not later than 31st of December of the following year. The country by country report of 2025 must be filed not later than 31st December 2026. The one of 2024 must be filed not later than 31st of December 2025. So this is the timeline for filing transfer pricing return. Objective of country by country reporting. Why do we ask companies to be providing their global turnover? That means the turnover from all the countries that they have subsidiary. What is the objective? To provide tax authority with information about multinational enterprise global activities, profit and taxes. That means to provide tax authority with information about a multinational enterprise, their global activities, their profit and their taxes. Another one is to provide tax authority with information on better, to provide tax authority with information to better assess the international tax avoidance risk. To better assess the international what? Tax avoidance risk. So this is one of the objective of country by country reports. Another objective of country by country report is to prevent tax evasion and avoidance through base erosion profit shifting. To prevent tax evasion and avoidance through what? Base erosion profit shifting. To prevent tax avoidance, tax evasion and avoidance through base erosion profit shifting. Now, if you want to file transfer pricing return, this transfer pricing return, if you want to file it, what are the documents that you need to attach while filing transfer pricing return? Like we all know, transfer pricing return, most especially transfer pricing disclosure form, they are filed along with company income tax. So if you want to file all this transfer pricing return, we have to attach the following document. First, you need to attach transfer pricing documentation. We need to attach transfer pricing policy. Second, you need to attach completed and signed disclosure and declaration form. Another one, audited financial statements, company income tax computation. So filing of annual transfer pricing return, you will need the following documents. First, transfer pricing documentation. Second, transfer pricing policy. Third, completed and signed transfer pricing disclosure and declaration form. Why? Another one, audited financial statements, company income tax self-assessment, tax computation. These are all what you need if you want to file transfer pricing return. However, if you want to submit your transfer pricing disclosure or declaration form to FRS, if you want to submit your transfer pricing disclosure or declaration form to FRS, what are the documents that you need to attach? What are the information that will be in your transfer pricing disclosure or declaration form? What are the information that will be in your transfer pricing disclosure or declaration form? What are the information? Number one, particulars of reporting company or entity. Particulars of reporting company or entity. Another one, particulars of immediate parent companies. Particulars of immediate parent company. That means content of transfer pricing disclosure and declaration form. Content of transfer pricing disclosure and declaration form. Particulars of reporting company or entity. Particulars of immediate parent companies. We have another one. Particulars of director of reporting entities. Particulars of 5 major shareholders of reporting companies and related parties. Ownership structure of reporting entity and related parties. Another content of transfer pricing disclosure and declaration form. Particulars of subsidiary and other connected persons is also needed. Particulars of external auditor of reporting entity. Particulars of tax consultant of the reporting entities. Particulars of company secretary of the reporting entity. While the last one, particulars of persons making the declaration form. So this transfer pricing declaration or disclosure form, they normally update it. FRS normally update it. I think the last time it was updated was January 2017. That was the last time it was updated. So maybe with this new finance new Nigeria Tax Act now, I think by next year there will be another update form relating to transfer pricing disclosure and declaration form. So, but it is very important for you to know the content of transfer pricing disclosures and declaration form. It is very important for you to know the content. So please take note of that. Now, we go to the next area called connected taxable person. What is connected taxable persons? Connected person is a person that have ability to control or influence another person in making financial or commercial or operational decision. So connected persons means a person that have ability to control a transaction or to influence another party transactions in making financial or operation or commercial decision. These connected persons, they are the one we are after under the transfer pricing. So now in Nigeria, when we talk about connected person in Nigeria, they are the individual or entity that have relationship with each other. They have relationship with each other. That can affect transfer pricing. Transfer pricing regulation 2018 define connected person as taxable persons as connected persons include, number one, husband and wife. Husband and wife have connected together. So if husband sell good to wife, it's going to have impact on the financial transaction. The price charged by the husband cannot be an arm's length price. It is a controlled transaction. Because they are related, that price will not be a fair price. Relative, brothers and sisters, siblings, when they do business transaction among themselves, they are connected parties. They are connected persons. Partner in a partnership business is connected to other partners. Trustee and beneficiary, they are connected in a trustee arrangement. Trustee and beneficiary are connected. When we talk about connected persons too, we can look at it in terms of company. A subsidiary is connected to his parents. An associate company is connected to his fellow associates. A joint venture company, they are connected together. A company located in the free trade zone is connected with another company within that group. A pioneer company is connected with another pioneer company. So these are the connected person. Agent is connected to the principal. Employee is connected to the employer. These are the examples of connected persons. When there is a transaction between connected persons, what we need to ensure is to ensure that that transaction is conducted at arm's length, fair value, true price, fair price transaction, which is arm's length transaction. Now, for FRS to determine whether transaction between connected persons is done as arm's length or not, what are the factors? Arm's length comparability factor in transfer pricing. What are the factors that will determine arm's length in a transfer pricing? Arm's length comparability factor in transfer pricing. What are the arm's length comparability factor in transfer pricing? Number one, the similar or identical nature of the transaction. The similar or identical nature of the transaction will determine whether there is an arm's length or it is not an arm's length. Another one, the facts and circumstances of the transaction per economic relevance. The facts and circumstances of the transaction per economic relevance. The characteristics of goods and services. The characteristics of goods and services transferred between the connected parties. The function undertaken by persons entering into the transaction. The contractual terms of the transaction is part of arm's length comparability factors. The economic circumstances in which the transaction takes place. This is also one of the factors. The business strategy pursued by connected taxable person to the controlled transaction. So these are the arm's length comparability factors. Ladies and gentlemen, this area too is one of the important areas. Let's take note of it. Arm's length comparability factor in transfer pricing. At least we should know 6 arm's length comparability factors in transfer pricing. The similarity or identical nature of the transaction enter into by uncontrolled taxable persons. The facts and circumstances of the transaction per economic relevance. The characteristics of the goods and services transferred. The function undertaken by persons entering into the transaction. Why the contractual terms of the transactions too. The economic circumstances in which the transaction takes place too. Why the business strategy pursued by the connected taxable person to the control transaction. All these are arm's length comparability factors in transfer pricing. Now, what are the methods of transfer pricing? What are the methods of transfer pricing? Method of transfer pricing. We have different methods in which goods are transferred between parent and subsidiary, between interrelated parties. Number one is comparable uncontrolled prices, price method. Comparable uncontrolled price method is the price charged for transaction between associate company or between a related party, similar to the price charged for the same transaction carried out between unrelated parties in a comparable circumstances. What we are saying is comparable uncontrolled price means A and B, assuming A and B, they are related, they are member of a group of companies, the same group of companies. If A sell good to B, what price does A charge? The price A charge should be the price that is the same with price that will charge by C and D. C and D are unrelated parties. They don't know themselves. They are not belong to the same group and company. So what we are saying in comparable uncontrolled prices, anytime that you want to charge price, you should think as if the transaction want to take place between unrelated parties, the same transaction that you want to sell, you want to deal with in a related party. If the transaction want to take place in an unrelated party, what will be the price? That is comparable uncontrolled price. Resale price method. Resale price method means when the seller, the independent enterprise, sell a product to an associate enterprise, and the price charged by independent enterprise is the selling price that is selling the good to an outsider. A and B are related. If A want to sell good to another person that is not related to him, how much A will charge? That is the sell price method. How much is A selling the good in a market? In the market, how much A is selling the good to the external parties? That is resale price method. Another one, cost plus method. Cost plus method means the price charged. This is the price charged when you consider the cost of production. You now add a markup to the cost of production. The markup is determined by independent enterprise. What markup price that independent enterprise add to the cost of production while selling the good, that is what you are going to add if you want to sell good to your related parties. Now, for the sake of time, we have looked at method of transfer pricing. What are the dispute resolution procedure under transfer pricing? Dispute resolution procedure under transfer pricing. Under the transfer pricing, dispute resolution procedure, first, we need to look at dispute resolution mechanism recommended by OECD. What is full meaning of OECD? What is full meaning of OECD? Organization of Economic Cooperation Development. What are the dispute resolution that they recommend under transfer pricing. First, advanced pricing agreement. One of the dispute resolution mechanisms recommended by OECD is called advanced pricing agreement, APA. This is an agreement between the taxpayer and the tax authority on the transfer pricing methodology. An agreement between the taxpayer and the tax authority on the transfer pricing methodology. That is advanced pricing agreement. Another dispute resolution mechanism recommended by OECD is called mutual agreement procedure. Mutual agreement procedure is a process of resolving transfer pricing disputes between two or more tax authorities. This one, when two tax authorities they are claiming that they will be the one to collect tax on that transfer pricing transaction, how do we resolve it for them? It's through mutual agreement procedure. Mutual agreement procedure aims to avoid double taxation and to prevent fiscal evasion. Mutual agreement procedure aims at avoiding double taxation and preventing fiscal evasion. Another dispute resolution mechanism recommended by OECD is called competent authority procedure. Competent authority procedure, a process of resolving transfer pricing dispute between tax authorities. This involves negotiation between the competent authority. Who are the competent authority? The Minister of Finance, the President of a country, the Minister of Finance of a country. They are the competent authority. Two Ministers of Finance of different countries can come together to resolve dispute on transfer pricing. Arbitration. Arbitration means a binding process of resolving transfer pricing by signing agreement, by signing a resolution dispute form. That is arbitration. This is another dispute resolution mechanism recommended by OECD. Another dispute resolution mechanism recommended by OECD is called mediation. Mediation. Mediation is a non-binding process for resolving transfer pricing. Mediation is a non-binding process for resolving transfer pricing. So all these are the transfer pricing mechanism, resolution mechanism recommended by OECD. How do we resolve transfer pricing in Nigeria? Transfer pricing resolution dispute, how do we resolve it in Nigeria? As stated by Transfer Pricing Regulation Act 2018. If you want to resolve transfer pricing dispute in Nigeria, as specified by Transfer Pricing Regulation Act 2018, you need to visit a decision review panel. If you have any complaint as a company relating to transfer pricing, or you have a dispute with tax authority, you must visit transfer pricing unit. First, you have option of visiting transfer pricing review panel to review the assessment given to you by FRS. Second, you also have option to lodge your complaint to transfer pricing unit within 30 days from the date you receive notice of assessment. You have option to lodge your complaint to transfer pricing unit within 30 days from the date you receive notice of assessment. So these are the dispute resolution mechanism under the transfer pricing. So this is what we have so far on transfer pricing regulation. And I have some questions and answer. The answer that has been provided. I think I have like 3 questions under this transfer pricing topic. Please try to lay your hand on those questions, especially number 3 question. Number 3 question. Please, let's try to lay our hand on those questions and attempt the question. So in case we have any question or any issue on the question, let us know. The solution to the question is there. So the questions are very simple. So please, transfer pricing is one of the international tasks. So let's take note of them. So do we have any question, any query regarding this? Do you have any question? Hello? Hello, do you have any question? So in the absence of no question, so this is where we are going to stop. We have looked at transfer pricing. In this topic, we look at objective of transfer pricing regulation. We look at method of transfer pricing. We look at transfer pricing documentation. We also look at country by country reporting. We look at transfer pricing dispute resolution. We also look at transfer pricing return, filing of transfer pricing return. We look at them. We look at connected taxable persons. We look at that too. We look at arm's length comparability factors too. What are the arm's length comparability factors? We have looked at that this night. And the last one, we look at dispute resolution mechanism. So should in case we have any question, let us know. So in the absence of no question, you can call it a day. Thank you for having me.